Thank you, everybody, for joining us today. We appreciate you taking some time out of your day. We have Scott Cooper, John Goodrich, John Schaub, and James Haggerty from Schmidt Kramer. They are going to be talking to you about the business interruption insurance, addressing some of the cases they've been working on, things that you need, best practices, and then at the end we will do a question through the chat features. With that said, I'm going to turn this over to you, Scott.
Hi, thanks, Hope. Thanks, everyone, for having us. First, just Jim, John, and Jack, as much as I love them, they're actually with their own firm, so I just wanted to, not Schmidt Kramer. Jack Goodrich is with his own firm out in Pittsburgh. It's Goodrich PC. Jim Haggerty's with the law firm of Haggerty, Goldberg, Cooper, Smith, and Schleifer in Philadelphia. And John Schaub is with Cohen & Swift in Philadelphia. But we're working on all of these cases together as a team. So although if they want to come work for me in Schmidt Kramer, that'd be kind of cool. So, but just to clear that up. So how we got here, and I think it's important just to lay the groundwork, is the background is a lot of the insurance companies, what you may hear, at least in newspapers or on TV, is that they really aren't equipped to pay these claims. And just some numbers to keep in mind, our position is in all these cases that the insurance companies are in a position to pay the claims, and that if there's going to need to be any bailout, they could get it from the federal government on the back end. But in 2018, there was at least $60 billion in profit just on the insurance companies. Overall, there was $819 billion in surplus, which means surplus is how much they had left over in the bank after they paid out all the claims for that year. And just by example, how they could turn around and pay money pretty quick, in the auto policy industry, State Farm and all the companies are basically each giving back $2 billion to policyholders in order to give them some money back on their premiums because they did not, yet no one's been using their cars for the last month. So there is a decent amount of money. Erie Insurance, if you look at their 2019 annual report, they had $9 billion in surplus. So that's just one company in Pennsylvania. As far as the breadth of how many policies this impacts, and then we'll move forward a little bit more. In February, Erie Insurance filed with the state insurance department a request, and it was approved, that on certain renewals, I think starting in June or July, there would be a 5.1% increase in premiums. And that was on the business owner policy. And Erie said it would affect 25,184 policies. So that would stand to reason that just for Erie Insurance, they've written about at least 25,000 policies that potentially involve the coverage we're talking about today. And if you think about, there's 100 other companies, if not more, that write business owner policies in Pennsylvania. It just shows you how much you're dealing with. As far as, we're here talking about business interruption, but some of you may have other issues that you want to look into. We're not going to cover them all today, but if you have any questions, give us, either one of us, a call later on in the PowerPoint or our emails. The business interruption and civil authority is mainly what we're going to cover today, and also the potential for virus exclusions. But you also need to look at event cancellation. If you have a business where events were canceled and were canceled because of the pandemic, you may have a separate claim under the policy because that event was canceled. In California yesterday, the Simon Wiesenthal Center filed with Chubb a claim for a whole bunch of events that were canceled, but it could apply also to a restaurant or a hotel. So you want to look into event cancellation, and it's the same concept that we're going to talk about. It's just a different part of the policy to look at. There's certain travel insurance policies that people are looking at. Workers' compensation and liability is going to be a whole different policy, but it's something that, depending on if you still have people working, you may need to look at. Directors and officers, or where corporations, they're a shareholder, basically shareholder suits. And then errors and omissions are potentially claims that I think would come out later on. If you're a specific business and you asked your agent for a specific type of coverage, like hypothetically, let's say 2 years ago, you asked your agent, I want to make sure I'm covered if there's a pandemic, and you were given assurances that it was. That would be something that would be, it's almost like negligence for the agent. So that's something you want to look at on errors and omissions. But it's very seldom going to apply. Most of these we're going to talk about today are the business interruption issues and the civil authority. As far as business interruption issues, and then Jim's going to explain what you can make a claim for under both. You want to make sure it's in your business owner or commercial property policy. And that's going to be for like the building and property and things like that. It applies generally to business owners, but if you're a property owner and a business is renting from you and they couldn't pay for the monthly rent, or they go out of business because of the pandemic, you may also have a business interruption claim as a property owner. There's also certain businesses that were able to totally remain open, technically 100%, but their business is impacted. And that's supply chain, where you're open and you can't get materials because the suppliers are closed. Or especially for restaurants and bars or hotels, you're able to stay open, but you're limited in some fashion. So you cannot use your premises in total. Either you're just doing delivery or takeout, or you're only able to rent out for like every other room or something. Those are the types of claims. Anytime your business has been interrupted, or you've been totally shut down, that's mainly what you're looking at. The types of businesses, in addition to restaurants and bars, would be hotels, amusement parks, casinos, bed and breakfasts, convention centers. We filed a case where we're filing on behalf of a golf course, certain campgrounds, toy stores. So those are the different types of businesses, even court reporters, dentists. That's not this organization, but if you know anyone, those are it's anyone who has a business are the types of businesses that you're going to be dealing with. And then the first part of your claim would be for business interruption, which I'm going to turn it over to Jim Haggerty to discuss.
Okay, let's talk a little bit about your policy of insurance. You have a business owner's policy of insurance that provides coverage for various losses. You need to get a copy of your policy. You need to get it so we can, if you're interested, we can certainly evaluate your claim. Most policies will have some form of business interruption coverage. Primarily what you'll see, there are on certain of these policies, such as the Erie policy, the commercial property coverage part, you'll see in it, they have an income protection coverage. Part A is income protection. Part B is extra expense coverage. Part C will be civil authority. Also, since you are restaurant owners primarily, there's also, you'll have contamination coverage. You should present a claim if you haven't presented a claim. If you've already spoken to your agent or broker about it, he or she has told you there's no coverage. Okay. All companies are telling people there's no coverage. Some companies are not even opening up claim files. They're saying there's no coverage, leave us alone. You need to get in touch with your agent or broker or the company directly and tell them you're making a claim for your business loss as a result of the COVID-19 pandemic. The first issue is that you're going to be facing is the income loss part of the coverage. The policy itself says we will provide income loss coverage where there has been physical damage to the premises. So we normally see this, there's a fire in the kitchen, you have to shut down for a while. Okay, we get the income loss in the meantime while they are fixing the kitchen. Here, insurance companies are taking the position that there is no physical damage to the premises, so therefore there is no coverage. We're challenging that position. There are not cases in Pennsylvania per se, but in other jurisdictions that have determined that you need not have an actual, what we normally think of physical damage, that the Chinese drywall cases where the drywall was emitting vapors, that was considered to be a physical damage. Here we have premises that are infected with the COVID-19 virus. So we think that the physical damage portion of that needs to be challenged, and we're challenging it in lawsuits. There is extra expense, which is expenses that you reasonably incur in connection with the business interruption. There's also a civil authority coverage under the additional coverage as part of your policy, which basically says that you are entitled to actual loss of income or rental income you sustain where civil authority prohibits access to the premises. Well, we certainly have that. We have civil authority preventing access to the premises. So there are different coverages that you can get access to under your policy of insurance. The insurance company will deny it. You need to make a claim. They will issue a denial of the claim. Some companies are issuing denials within hours of the presentation of the claim, which we're maintaining the position is a violation of the Unfair Insurance Practices Act and the Consumer Protection Law. But regardless, so you need to make a claim. You need to know that claims can be made. There is, in case of restaurants, there's contamination coverages, et cetera. Some policies, not all policies, have a virus exclusion. In addition to the physical damage requirement that the insurance companies are throwing up in everyone's face, they're also saying we have a virus exclusion. If the company has it, a question exists as to whether the COVID-19 pandemic qualifies as a virus for purposes of that exclusion, whether what is excluded includes all the losses and damages and expenses is another issue that we are litigating. We're starting class actions on behalf of, we represent a number of restaurants, and we're starting class actions when we have one individual or business insured by one company. We're starting one class action. We're then filing individual claims on behalf of the other companies insured by that same company. If there is a class action resolution, those individual cases will be folded into the class for purposes of resolution. So the first thing is you need to get your policy, you need to present a claim. They're going to deny it on the basis of physical damage. If they have a virus exclusion, they will deny on that basis. We are then challenging them. We're filing actions primarily in state court some actions may be in federal court depending upon what the insurance companies do in reaction. We've also filed a petition asking the state Supreme Court to take jurisdiction to address and resolve these issues, because to litigate these insurance coverage issues through the court, first you go through your common pleas court, whether in your Montgomery County or Philadelphia County, whatever, then you go to the Superior Court, then you have to get to the Supreme Court. That could be a 4 or 5 year process. We're taking a position, we don't have 4 or 5 years to wait. We need resolution of these now. We're asking the Supreme Court to take control, establish a policy and procedure for addressing these coverage issues, determine whether there is coverage, and then allow the insureds to make their claim and get coverage and hopefully move on with their businesses. There's also, in addition to coverages, even if you're able to reopen, there's also a coverage for full resumption of operations. While you're resuming your operations, you still may have loss. So you need to be aware of these coverages. You need to present a claim. The insurance companies are your friends when you're paying premiums. When you have a claim, they treat you like a long lost relative looking for a loan. Insurance companies understand pressure. The way to negotiate with insurance companies is the way Henry Kissinger said to negotiate. We all know Henry Kissinger, former Secretary of State. Henry Kissinger said, the best way to negotiate is to reach across the table and between your thumb and forefinger, grab your opponent's testicle. Insurance companies understand pressure. That's all they understand and respond to. Making claims and presenting lawsuits is pressure being applied. The more claims, the more lawsuits, the more pressure. That's why we have a consortium of attorneys throughout the state, and that's what we're doing on class actions and individual cases. We're trying to protect the rights of people. You've paid a premium for this coverage. You're entitled to the coverage.
Okay. And then, so going back for a couple slides, Jim talked about the business interruption, and that's basically your loss of not being able to use it fully your business, and that's the position is the physical loss of use. But also there's another coverage, physical authority he mentioned, and that's more or less when you're just shut down or totally restricted by a governmental order, and that would be the governor's at-home order, or if you're a restaurant and you can only do delivery and takeout, because there's a governmental order, and that's why you don't need, for the civil authority, you do not have to have any physical damage to your premises. So there's 2 different types of coverage. And the civil authority, Jim talked about the resumption of business. For business interruption, it's the entire time that you're interrupted. The civil authority generally will apply for 30 days. Some policies go as long as 6 weeks that you're impacted by the government order. The civil authority, there generally is a 72-hour deductible. Basically, you cannot, they don't start paying until you're impacted 72 hours, but then it'll go for 30 days or 6 weeks, depending on your coverage. And it's more limited in time and scope. So one of the things as part of a good business practice for this, if you're making a claim, make sure that you report to the company when your interruption or when you were started to get shut down was, because each county in each part of the state had a different order as far as when to close. Some in the southeast were on early on in Allegheny County, and then it kind of worked its way into the center part of the state. So you're going to need to the best you can, keep track of that for the civil authority. Our positions, and Jim talked a little bit about it, is one, it's physical loss of use of your business. The policies don't define physical loss or damage. And in the law in Pennsylvania is, as long as there's a reasonable interpretation, even if it's ambiguous, you as the insured win. And hired some experts in insurance who that's all they've done for their whole life is represent insurance companies, actually. Who are going to help us on that. You also have the civil authority. So some cases we're saying, well, if there's no interruption, technically, you still have a civil authority. A lot of people are probably being told or reading that there's a virus exclusion that they don't cover for virus. There's two things. One, most policies actually do not have a virus exclusion. The virus exclusion was just added to some policies back in 2006. The other thing is we are talking with infectious disease people who are kind of explaining to us that the virus is one thing, but the actual illness is COVID-19. So it's similar to the HIV, AIDS development, or you're familiar with asbestos, there's asbestosis, and then mesothelioma. So there's different ways to get around the exclusion, and we think we'll be able to do that. There's also a reasonable expectations argument. One of the things is, as the insured, what your expectation was. If your policy says cover everything, and what your expectations were. Those are harder to win, but there's a way to win those. And then also, if you were with a company for a long time, going back to even before 2006, and a lot of people were, if you've owned a business for a long time, these virus exclusions were not in the policies before 2006. And there's certain cases that require the insurance company to make sure you are aware and have notice of the, if there's a change to the policy. So if an exclusion was added, the company would have had to make sure you had notice of that. So those are some ways to avoid that. As far as the insurance company positions, every insurance company has denied payment. They're, no matter what it is, if you filed for business interruption, you should also assume that you filed for civil authority. The insurance company should be looking at both. What you need to do, or if you want to send it to us, is look at the denial letter. The denial letter should say why they're denying your claim. Most companies are saying, as I'm going to talk right now, that it's not a physical loss. And because it's not a physical loss, there's no claim for business interruption. And because it's not a physical loss, there's no claim for civil authority. So you want to look at the denial letter. And if you haven't gotten one yet, Jack is going to talk in a minute about how to make sure you get one. They're also saying that, again, there's no prohibition to access to the property. That's how they're arguing to get around the civil authority. That there's some are arguing the virus exclusion. The force majeure is basically an act of God argument where they say there's no way we ever could have anticipated it. And we found, as part of research in these cases to get ready to file them, that the insurance companies knew, and it started looking into these coverages as far back as 2015, that they started talking about anticipating pandemics and to cover for the insurance. So it's kind of hard to say it's an act of God, we couldn't have anticipated it if they were already talking about it 45 years ago. So with that, before we talk about the cases, I want to ask John to just talk about the difference between the two cases that we've been filing, and then I'll just talk a little bit about the cases themselves.
Thanks, Scott. Thank you all for attending this seminar. It's an important issue for everybody, and it's a trying time for us all. So I was asked to discuss today the difference between a class action and an individual action. And I'm going to assume, for purposes of this talk, that most of us know very little about how that system works, how the litigation system works. So I'm going to take it at a very simple level. A class action means that rather than repeat the same case dozens or hundreds of times in one court with one insurance policy that's the same for everybody, the courts think it makes more sense to be efficient and do it in one case. So we have one person that is what we call the representative of the class. So it would be John Doe versus State Farm. But John Doe actually represents not just himself, but he represents everybody that has a State Farm policy. And the reason why we sometimes file cases in that manner is because the efficiencies of aggregating people together in one action is a sensible response, because if you're just going to have the same policy and you're doing it over and over again, just doesn't quite make sense. Now, we file these cases as class actions, but we have to demonstrate to the judges who have the case before them why this should be a class action. Sometimes the defendants challenge that idea that it should be a class, because in their mind, it's easier to take on one person than it is to take on 100 people that have the same policy. And so we file cases as class actions. One of the disadvantages of a class action, though, is that it takes a little bit of time to get to the actual merits of the case, because the first part of the case is about whether or not it is a class action or not. And that is sounds like a simple question, but it's actually rather complicated. You have to produce evidence to the judge that demonstrates why there's uniformity in this class, why the person that's leading the class is able to do that, understands the case, why the lawyers that represent the class are competent and skilled and have the resources. Because as we all know, in these kind of cases, the plaintiffs aren't paying for anything. The lawyers are footing the bill. So the judge wants to make sure that the lawyers are able to foot the bill through the whole, if need, through trial. On the other hand, we're all more familiar, of course, with what an individual case is. It's your case against the insurance company. Still, again, the case is taken on a contingency basis, meaning that if the lawyers don't win, then you're not on the hook for anything. The difference in the fee arrangements between an individual and a class action is, in a class action, the plaintiffs and the class action lawyers don't agree on a fee. The lawyers ask the judge at the end of the case to award them, if there's a successful result, a reasonable fee. In an individual case, of course, there's a contract between the lawyer and the client. And whatever that contract says, assuming it's reasonable, it's not overreaching, it's not unethical, the courts will honor that contract, and it's a private arrangement. And so we sometimes file these cases, depending on the situation, as individual cases, where we ask for what's called a declaratory judgment. We're looking for a ruling on the scope of the coverage. Other times it makes sense to aggregate the cases together, and sometimes we actually do a hybrid of both. So that kind of explains in a big picture way the difference between the two actions. Scott, I'll turn it back to you.
Thanks, John. So if you go to the next slide, these are the initial filed cases. The initial filed cases are from all different types of businesses that we're following. We've filed the Tambellini versus Erie Insurance Exchange, and that's the case that Jim was talking about, that we filed that as an individual case in Allegheny County, and we're basically seeking the court in Allegheny County to declare that the restaurant is entitled to coverage. There is no virus exclusion in that policy. Like Jim said, yesterday we filed a motion with the state Supreme Court asking for them to take immediate, what's known as King's Bench, which is because it's a issue of huge importance that affects thousands of individual people. that we'd like them to, it's short circuiting everything to get a decision sooner rather than later. And they did do that in one case already, dealing with the COVID-19 situation, dealing with businesses that were deemed non-essential, and they decided that issue, but it's very seldom accepted. The other one is HTR Sides, which is a class action. Same concept in Allegheny County. Windber Medical versus Travelers is a medical center in Somerset that could not do any procedures and was shut down. Then there's a hair salon, and then River City versus Admirals, a whole series of restaurants in the Philadelphia area that filed their own cases in the Eastern District of Pennsylvania. So those are some of the cases. And yesterday, Jack, who's going to speak in a minute, filed a claim in Pittsburgh on behalf of a pizzeria. And there's another claim that we're filing today against Selective up in Northeast Philly. So cases are piling up, and that's why we filed the King's Bench request, in order to try to get the Supreme Court to take the case and decide the issue now, as opposed to waiting 4 or 5 years. But one of the biggest issues initially for a lot of people is actually getting past, home plate to first base. Is a lot of the companies are just saying you don't have anything, so don't worry about it, and then you hang up the phone. Jack's going to talk, he just wants to talk about what you need to do in order to make sure that you don't end up prejudicing your claim by not even reporting it, or by listening to the company without them writing it down.
Thank you. As you've probably noticed, a lot of this is marginalized and morphed into each other's topics because it is intertwined. But as Scott said, before you get to first base, you have to file a claim. And what we found out procedurally with the people that were initially contacting us is that they were getting blanket generic denials. You'd call your point of reference, which is normally your adjuster, the person who sold you the policy and told you what the premium is, and that's who you would file your claim with. So you would call your adjusters up, or your agents, more so your agents, and the agents were summarily saying you didn't have a claim. They're saying it's an act of God, it's unforeseeable, it's just not covered. And what we've been doing is telling our people to force the agent or the company to take your claim. They are under an obligation under the Insurance Practices Act that they have to do this, or it's a violation. And that can also lead to secondary lawsuits under the Consumer Protection Plan. But the first thing you have to do is demand a claim. We do have a couple cases where that was not done initially, but we have emails, documentation confirmation that they spoke to this person. Here's the communications back and forth, and they were told they don't have a claim. The insurance company may try to come up and say that there's a late notice requirement. In other words, they didn't have notice of what was going on, but they have to be able to prove that that they've been prejudiced, which under the circumstances of the C-19 pandemic, they're going to have a very difficult time, especially with what's going on and all the claims that are coming in. But the first thing, again, is you file your claim. Now, when you file a claim, you're going to get a document similar to this. It's either going to be a denial or a reservation of rights. And basically, it's you're the consumer. The insurance company has a fiduciary right to properly, fairly take care of you and inform you. So within the reservation of rights or the denial, they have to be very specific as to why they are telling you you do not have coverage, or why they are giving you, quote unquote, a reservation of rights. For my 2 cents, it's the same thing as the denial. It's just a kind way of saying it, because it's basically putting you on the side. That is all you need. But within the reservation of rights, it'll go through your types of coverages you have, whether it's perils against, what it is, tell you what your covered losses are, and what Scott and Jim said is correct. They'll tell you that you have coverage for property loss, but they don't tell you what property loss is. And Jim and Scott already told you about that, and ambiguities, and inures to the favor of the insured. It'll also go through, like this one that I'm looking at here, it talked about civil authority. So I know there was a question that cropped up on the computer. It's their duty to explain to you what coverages and what you have and why they do or do not apply. The reason this is important is because I'm not going to bore you with case law names, but there was a case that came down this week that said that the insurance company may be stopped from raising this in the future as to a reason why your claim was denied if they did not give you notice of it up front. So again, it's very important to get the ground rules up front in the form of a denial letter. If they don't give you the denial letter, I think Jim's going to talk about the action that's going to be filed today or tomorrow, because the violation of not providing this information or not taking your claim. So if you would have a circumstance where you try to file a claim and they don't take it, document who you spoke to, when you spoke to them, and I would suggest following it up with an email or text so that you have something documented, just not your word. That would be the most important things that I would talk about right now, because again, like I said, everything has been talked about. The restaurants we have, I'm already talking to them about event cancellation, because I'm having some of these people, some of these clients that have bars, restaurants, catering centers are already having weddings and events canceled, graduation parties, etc. So that is another area within a separate form of your policy that may give you additional coverage, i.e. additional monies for your losses. Thank you.
And if the company still refuses, you see on there it says insurance department, you can file a complaint with the Department of Insurance. That would be a violation of the Unfair Insurance Practices Act. However, there also is a consumer protection provision that Jim's filing up in the Northeast on behalf of, against Selective, where Selective just refused to open up files or investigate them. And it's not a lot. It's like $300 a claim, but it's really to force them to open up the claim. So with that, and then like Jack had said, someone had written in that they said there's no physical damage and you have civil authority closed you. Actually, it really is both. It's both civil authority and business interruption, because when you're closed, your business is interrupted. So you should contact us or someone about filing a lawsuit in order to get this rolling. So I also put all our email addresses if there's any reason that you need to get a hold of us. There is some legislation you do want to be aware of. Some people have asked, well, can't the legislature just force the insurance companies to cover this? There's a Senate bill 1114 by Senator Hughes from Philadelphia County, and House Bill 2372 by Representative Dermody from out in Pittsburgh. And they're basically the same thing. What they basically do is mandate that the insurance companies provide the business interruption coverage, making it retroactive to the beginning of March. The concept is exceptional and we totally support it. The problem is there's a constitutional problem where the legislature cannot make a law that is retroactive. So because it's retroactive and because it started back in March, it probably would end up being unconstitutional. The other reason is because it would have to go through the legislative process, which you don't want to rely on. The other thing is House Bill 2386 by Representative Mahaffey. This was a bill that was earlier this week. And the bill basically says that the businesses can apply to the state for what would be known as business interruption grants. And the business interruption grant would be paid for by the state. The problem is the state would pay for it out of the general funds. The insurance companies then wouldn't have to pay anything. And when the legislature saw how much it would cost, the bill was sent back and probably won't be considered. What my personal thinking would be, the insurance company should pay the claims. And then once they pay the claims, then if they have issues, they could go to the state for a grant, or if the federal government hasn't bailed them out. But also as part of it, they should agree to not raise premiums for 5 years. That's just my personal, that's not out there. I'm just telling you how I feel about it. So also, there's been talk about a federal COVID-19 claims fund. That's been proposed, but I don't know if that's going to happen. It's just talk at this point. Before we just finish up, and if anyone has any other questions, there is one question, and I'll see if Jack wants to take a shot at answering. Someone put in that State Farm, someone filed a claim, Jack, saying that State Farm doesn't pay unless the building is damaged. Should I still try to put in the actual claim? And I think that's right up where you were talking about.
Absolutely. That's the premise and pretext that they're basing a lot of their claims on, it, that there's not physical damage. The policies that we've seen are very consistent. They say physical damage or physical loss. And there's a long line of cases in a lot of different jurisdictions that you don't have to have the roof cave in, the wall cave in, a house fire, a kitchen fire, etc., for the policy to apply. So you want to, as a policyholder, demand that they take your claim and then issue a formal written denial. Absolutely. And then call us.
And the other, and I think the important thing to keep in mind is when the companies are saying it's physical loss, they're just saying you have to have damage to the property. The policies are all ambiguous. It says physical loss or damage, and there's a reason why you put in the word or they did. Or, everyone knows what damage is, but physical loss can be read in a reasonable fashion, physical loss of use of your property as you're anticipating doing it. So that is the reason for the claim. So all you really need to do is call and say, I want to bring a claim for my business interruption during this time, and they will open it. They may give you some pushback, but if not, say, okay, I'll file a complaint with the insurance department, and my lawyers will call you, but they'll open it, and then they'll take this information and you'll get a denial letter in about 2 or 3 days, or even that afternoon.
But there was a question there about, should I continue to file claims? If you file a claim and you're denied, at that point, it's either you do nothing or you got to move on and get legal help.
Right. And the other question was, you were denied because of the virus, and the policy says you have coverage for ordinance or law coverage. That's actually the civil authority coverage. So you do have coverage for civil authority. That's not even ordinance or law. That's the governmental action that shuts you down or significantly impacts your business. An ordinance would be if the local township passed something that said you can no longer operate a bar or something.
Yeah, they're actually two different coverages. The civil authority is if you're denied access to your premises because of governmental action. Ordinance or law is a coverage which is, or an exclusion, however it is in your policy, if in fact you have a premises. In the meantime, government has passed a law saying you now have to have sprinklers. Then the question is, is there ordinance or law coverage? Because of the ordinance or law, your property has to be better than it was before the fire. That's really a separate coverage here. That is probably not indicated. If they're claiming ordinance or law issues, then they're really kind of off base.
Right, and that's why I think if you go back to one of the screens, the companies are using every different way to deny or not open a file. Again, you want to open the file. Someone just asked a question on if we're doing these cases on a retainer or a percentage. All of the cases, at least we're doing, are contingency fee on a percentage basis. So none of the businesses have paid us anything. And if we don't win, they're not paying us anything either. And we lay out all the costs. So
this is where Scott stands up and says, unless you don't get paid, we don't get paid. Right? You've seen the commercials.
Yeah, that's the wrong.
Trying to avoid them.
That's the wrong law firm, Jim.
Right. Hey, Scott, it was funny to note that they're giving back money on auto premiums, but they're not giving it back on property and casualty.
Yeah.
Right. That's another thing. So, you know, and the last slide just said there are some things that you may want to be, because if you own a business and you have deliveries, is not only we talked about the middle one that auto insurers are giving back premiums, but also in every insurance policy, personal insurance policy, there's what's known as a for-fee or delivery exclusion. It basically means if you hire a delivery person and they're delivering pizza or Chinese food or a steak on your business's behalf, and they're getting reimbursed, that the policy doesn't apply because the person is operating their vehicle for a fee, just like an Uber or something like that. The auto insurers have filed with the Department of Insurance COVID-19 notices that say during the time of the emergency, they're not enforcing this exclusion. Most companies, I can't guarantee you all, but that's something you may want to be aware of and call your company or your delivery person's company. And it generally is running from March 20th, give or take, to the end of May. The other thing is insurers were instructed not to cancel policies for lack of premium during lack of payment of premium. So if you didn't pay your premium, they're not supposed to cancel it to cancel your policy. So you want to be aware of that.
Still better practice to pay your premiums if you can.
Right. Then Jim, someone had a question that if they're going to, and Jim worked for the insurance companies for a long time. That's how he knows a lot of this ins and outs. That they're not going to renew someone's policy even if they're not successful. So it would be a mistake to file a claim. Could you address that?
I'm sorry, what was that issue again?
Oh, that they won't they're worried about getting renewed, even that just by bringing a claim, they're going to get canceled or not renewed.
I wouldn't worry about that. So first of all, they're not going to non-renew you. If you present a claim, you've paid a premium for this coverage. If you don't, and I know we've run into people saying, well, I don't want to present a claim because they're going to increase my premiums. Well, you know what? If everybody else is presenting a claim and they're paying, premiums are based upon payments. If they're making payments to other people, your premium's going to go up with everyone else's if they're paying more. I mean, that's the reality of it. So you can sit back and say, well, I don't want to present a claim because my premium's going to go up if I present a claim. Trust me, your premium's going to go up either way.
And someone had sent in a request about if we could help them out with a Delaware case, a Delaware policy and stuff. We can either email or call one of us, and we've had about 3 or 4 people put in. My understanding is that PowerPoint's going to go around to everyone, but if not, I'll just give you the email addresses again for each of us. Mine is schmidt@schmidtkramer.com, schmidtkramer.com. Jack's is wrong on the slide. It's my fault. It's jack@goodrichpc.com. Jim's is jhaggerty@hgsklawyers.com. And John's is jshub, shub@coneswift.com. Also, the webinar is being recorded, and an email will be sent, and it'll be emailed to everyone who participated today. Jim, Jack, John, you have anything else to add?
One more question, Scott, was they were asking how to start legal proceedings or retaining counsel.
Jack?
What are the steps?
Well, get back to, I assume you're
Well, one of us. No.
after you've got your denial, then you get hold of one of us, and because we're all working together across the state, and we'll just look at what venue we're going to file it at, but we'll take good care of you.
And my suggestion would be, even if you don't have a denial, but you are making the claim and you have your policy, at least get in touch with one of us or, whoever, but you want to get in touch with the lawyer now, and you just want to keep pushing the denial. The case probably wouldn't be able to get filed until you had the denial, but at least you can get things up and running. I spoke to someone on Monday. They sent me the policy. They didn't have the denial yet. They just got the denial yesterday, and we're going to be filing something today or tomorrow. So,
Scott and Jimmy, I just had one come in during the seminar. They just sent me the policy, so I just got that. And he's a dentist.
And then someone just put in, do we have any experience with Penn National Insurance? Yes, we all do.
Doing them right now.
No, we all have experience with Penn National, and Penn National is denied. Well, they have the denial already too. They're going to be denying as well. Basically any insurance company we've been dealing with up and down the board. So
Every company's no company's going to voluntarily pay these claims. You're not going to get anywhere by sitting back and doing nothing.
And it's like what I said at the beginning when I spoke, it was almost a canned response that the insureds were getting when they were calling their agent that no, they weren't being covered. I've heard of nobody saying it would be covered. Everyone's been told to deny.
Right. And actually, if you look at, I pulled up this morning, we have about 15 Erie Insurance Exchange cases, and every one of the letters are almost a cut and paste. It just changes like the first sentence and the last sentence. But it always starts out, we're really sorry, we can't help you, but. So every claim is being denied.
And they're not really sorry.
And the other thing you do want to do is you want to make sure, and someone asked if you got PPP money, whether that would be like different. We think it is, so it does not hurt to file the claim, even if you receive PPP money, because in some circumstances it has to be paid back anyway. So,
yes.
And this is coverage you've paid for. So, if no one has any other questions, we really appreciate the opportunity and hope this was informative and educational.
If you have any
Thank you so
questions.
much.
You can certainly send us emails, any of us, if you have questions.
Yeah, someone put in that we want to do this anywhere else. If you know anyone, we'll do this, or we could do it. We're not doing anything, so we could do it tomorrow. So
it looks like Carl might reach out to you with the PABI, which is another association.
Yeah, Carl, if you want, we could do one of those for PABI, I guess.
Great.
Just so the participants know, we each have 25 to 30 to 35 to 40 years of experience.
Yeah.
This is what we do for a living. Every one of us are super lawyers and whatever else designations
and
they throw around.
And we're ethical. Jack and Jim are chair and vice chair of the Pennsylvania Disciplinary Board. So.
Well, thank you so much for all of you getting on and the 4 of you taking time to present this information. I know it's questions we've been getting asked for the last week or so, over this whole time period, and I think you'll probably be getting some calls. But we will be sending this out as a recording so that you'll be able to reference back. And if you have any issues, just reach out to us at getting in touch with them, and I can reach out to Scott and make sure that we get you connected.
Cool. Appreciate it, everyone. Stay healthy.
Great. Thanks, everybody. Stay safe.
Bye-bye.
Don't kiss strangers.